Hi, Richard here, and happy Christmas to you all. Very close to Christmas now, being a late afternoon, Wednesday, the 22nd of December, and starting with a chart of the Australian dollar just to see exactly where the pressure is there, threatening to break through. This blue line is parity, and we are only 30 pips below it at the moment. In the event that something occurs late this evening or overnight and pushes up, then I would say that the dollar is on track to hit around about 1.03, so that's 3 cents above parity, and would be in line with this long-term trend line here that stretches way back into time. In fact, we'd have to go to a weekly chart to show you that accurately. So there's the weekly chart. You can see that back here in October 2007, respected here after mid GFC breakdown and then retracement to test in September 2008, and then of course here in November 2009. So that's really 12 months ago, this test of that trend line here, and here we are again. So back to the daily chart, really contingent upon the US dollar here, but in the event that it goes through, the target is this overhead trend line at around 3 cents above parity. So just moving to the US dollar index, this is still a long trade, and indefinitely this is a weekly chart, and you can see the test here, the 50 moving average. It pulled back, very long tail here. This is a hammer. It's a bullish pattern. That suggests then that we're going to get further upside as indicated by the arrow. Initial target would be, I would say, up around the sort of 82.5 to 83 mark. So that would see, if that is the case, that would see then that we're going to get a pullback in silver and gold, and indeed the US dollar. So sorry, the Australian dollar. So I don't think it's going to last long above parity in the event that it does push through. In order to get the Aussie dollar above parity, this would have to break back down, which is of course always possible. So jury's out, and we wait and see what's going on there. Again, there's the Aussie dollar push up, would mean that the US dollars come off. This is the Dow Jones, and again, you know, a lot of sideways action, slightly to up. There's a number of indicators, including the advanced decline ratio, which is really out of whack. We know that that goes back all the way to 87, but indeed these volume lows can be assessed against the major high that we had in October 2007, and also the major low that we had after the GFC in March 2009, when these indicators were so oversold, or in case of that's in the case of the March low, March 2009 low, or indeed so overbought. At the moment this is in record territory, but it still pushes up, and I guess, you know, if it gets a breakout, then we'd expect that 11,850 be taken out. At the moment that seems unlikely. Certainly the Australian market, which this is, this long-term trend overhead resistance is still in play. It hasn't broken through. It's only gone sideways to a little bit to down, but where we did get a breakdown in the market force, these two light bars indicate a weakening in trend, but there was no signal to go short. And then indeed the last couple of days we've had solid green bars to up, indicating that the relative strength is still there. So it's clearly waiting for direction from the world markets, and you know, it would need really some significant event to blast it through target 4900, which now is slipping to the left, but given that it's been a sideways market really since beginning of September this year, that would be a fair thing. This is the financials, so just to look at where, you know, the market action has been. Well, clearly it's not been in the financials. So we've seen this rising trend line from July this year, been hit once, broken through, came up. We expected that to be resistance. It didn't. It came up and retested another descending trend line, and of course it's wedged in between now, which has become a bit of a pressure cooker. We've got a solid bar just poking its nose through on the market force. That would indicate that the relative strength and momentum is pushing to the downside, but yet that has not occurred. So where's the action been? Well, clearly this has been in the materials sector, which this is, so BHP, Rio, some of our other takeover targets such as Riversdale and others. We've had a long signal on the materials on the daily chart. This last chart was daily as well for some time now. So we'd expect, as we lead into this Santa rally, we'd expect that a test of the sort of 4,400 to 4,500 to be undertaken. This is the euro. Clearly, as the US dollar's gone up, and this has come down. So in a mirror opposite, we're pushing down in what looks like a fifth wave here. So even though we thought that was ABC correctional, this is turning out to be a retest of this long-term support resistance line, and we're on track to target at 1.2995, which is really not far away. And it is quite possible that if this got steam up, that it'd really push down heavily. You can see that in the market force we've gone to one light bar, so certainly the pressure has come off a little in terms of the downward trend, but there's no doubt that this is truly a bearish move. So moving on to gold, you can see now that gold also being influenced by the US dollar. This is 3 candles which are really coming up to test the support line, support resistance line. In the event that there was a solid red bar down here over the next couple of days, or day in particular, then that would indicate a continuation pattern, very standard candle pattern where you get one big down day, a couple of up days that retest that line, and then you get a down day, get a bit of sideways action, and then the trend continues. So seems a bit unrealistic just at this point, but the potential is for 1250 to be reached in very short order in the event that that lets go. And of course that would shock a lot of people who all think that gold is on track to go to, who knows, 1463 is one target, but 1500, some people are quoting 2,000, 3,000, 4,000 dollars. Well, hyperinflation's not here yet. In fact, deflation is more the likely outcome. So we need to stand by and just see what happens once we get back into a bit of volume post Christmas. And just to have a look at oil, here it is, very messy sideways pattern. We've got a bit of a top reversal candle here. Certainly that high has not been taken out, and certainly it looks like it's going to retest this long-standing support line. If we go to a weekly chart, just to put that in perspective, I mean, there's the amazing bull market up to 150 odd dollars, and then it just came off in a near vertical drop. A lot of money was made during this period, and since then this is the support resistance line that we were just looking at. It runs back to June 2009, and clearly it's being retested. In the event that it pushed further out, then I guess we could say that $100 would be the next cab off the rank. But at this point, going back to the daily, I think that's unlikely. I can count very clearly 1, 2, and 3, 4, and to complete 5 waves. So it's possible that this spike high would be taken out at around $92, or perhaps even a little bit higher. But at this point, the resistance line is in place. It's a retest of that, and we'll see what happens over the next week or so, even though we've got some light volume happening. Alright, well, once again, happy Christmas to you all. That's the marketforecaster.com.au wrap up for the year. Happy trading, and be aware that there is some significant risk to this upside. Yeah, we always experience corrections, but this correction looks to be really wholly committed to by a lot of the fund managers and a lot of the retail investors. In the event that it comes off, it'll come off extremely heavily and probably surprise everyone I should say. But watch out for the US dollar strengthening. That will be an indication, and that will mean that the Aussie dollar, gold, silver and the indices are likely to come off. In the event that doesn't occur, always having a bob each way, then we'll see some further sideways to up action over the next few weeks certainly. Alright, all the best.